good evening, wherever you're at. This is Kerry with Ramm Financial. This is going to be a quick YouTube video about credit stacking for real estate investors and also how you could use this to be able to grow your real estate portfolio in the year of 2025. Let's get straight into it. Brief overview of Ramm Financial. Our specific clientele are going to be real estate investors who are going to be doing value add properties within that market. So BRRRRs, fix and flip to sell, or fix to flip to rent. Now, a lot of our clients take advantage of our credit stacking program. This credit stacking program, you can get upwards of $150,000 to $250,000 to be able to use at 0% interest, in order to be to reward it $150,000 per LLC that you own. So if you own two different LLCs, you can essentially get up to $300,000 at 0% interest to be able to do any type of real estate investment that you need. Okay, so what is credit stacking? Credit card stacking is a strategy of applying for multiple credit lines in a specific order to access a larger unsecured line of credit than individual small credit cards can offer. So basically, you apply to multiple different lines of credit for three different banks, depending on what industry you're in or region that you're in. In this case, we're in the real estate industry in specific regions throughout the whole United States. You would use these separate institutions to get lower limit cards and then stack them all together to get upwards of $250,000 to $300,000 to be able to use within your real estate business, to be able to do it for, use it for transactional funds, or in terms of like down payments, or to be able to pay your contractor and buy supplies. Some of my clients even buy houses off of the auction house and are able to clean it out, do light rehab, and do cash out refi within that 12 to 18 month period that these credit cards are at 0% interest. So how credit card stacking actually works. Requirements are you have to have above a 680 credit score. Of course, the higher the better. And then also there's a whole bunch of other things like your utilization needs to be low, and at least $15,000 of personal lines of credit available to you. We could definitely work with lower amounts, but we want to be able to see that you have comparable credit on your personal side. So second, you want to choose between 5 to 10 banks to work with. We have relationship managers at multiple different banks throughout the whole United States. So if you're in a specific region and you need to get access to upwards of $250,000, we could definitely help you out through our relationship managers. So we target these business credit cards that don't report to your personal credit report, and then also that they have these introductory fees of 0% interest for anywhere from 6 to 18 months. So it's really good for value add investors because they're going to be in and out of that property within that 12-month time span or 6 to 18-month time span. If permits go well, because a normal fix and flip takes about 3 to 4 months to complete, as long as everything goes smoothly with the permitting process. So these cards are perfect because you could be in and out of them at 0% interest. Usually, if you're using partners, they're going to be charging you interest higher than 0%, of course. And then in addition, they're also going to be charging you, or if it's an equity partner, you'll be splitting it 50-50. I know one of my clients in Texas, he was saying that, hey, last time he did a fix and flip, he made it was $100,000 profit from the fix and flip, but he had to split it 50-50, and all he needed was about $40,000 in total to be able to make that $100,000. So we were able to get him a line of credit of $200,000 to be able to use. So next time he could keep all of his equity instead of splitting with an equity partner. So fourth, after the approval, you could basically use it for anything in terms of basically for business purposes, of course. You could use it for even gas if you wanted to, but I would strictly use it specifically for transactional funds or down payments. We've even had clients that went to the auction house and then saw a really good deal that they could pay for they have to pay for it with cash within 24 hours. That's some of the auction houses rules. Some may say 24 hours, some may say within 2 weeks, but normally a hard money lender won't be able to close in that type of period. So if you had a $250,000 on tap at 0% interest for 12 months, you could essentially wire transfer off those cards to that auction house using apps called Melio or Plastique, and you're able to purchase that house and then clean it out, do a little bit of light rehab, and then a few months down the line do a cash out refi, take the money, pay back the line of credit, and you're good to go. So the benefits of credit stacking. It's hard for real estate investors to save up lots of money, especially if you're working your W-2 job and you don't have another business on the side. You have to save up for years to get upwards of $60,000. I personally was able to get upwards of 150 grand in about 60 days. For my first round of funding to be able to use for my real estate portfolio, I specifically invest in subject to deals where basically you need little to no money down to be able to take over the title of the house and then basically rent it out to other individuals. But yes, you can use upwards of $250,000 to be able to creatively hack away at building your real estate portfolio over a long period of time. So the key thing to look at is many of the banks only pull from one of the three credit bureaus. So you have Experian, Equifax, and TransUnion. So what we do at Ramm Financial is we have relationship managers with multiple different banks throughout the whole United States, and we stagger the application to be able to not show up as high risk because of the fact that you're applying for multiple different lines of credit. And there's a whole lot of other things that actually go in the background of it too, some little nuances. But if you hop on the call with us, we could definitely explain further and help you out. But yeah, so of course, they're pulling from Experian, Equifax, and TransUnion. And up on the screen here, you see some of the limits that our clients are able to get through our relationship managers. So we cut the red tape. These are no doc loans. You don't have to show business revenue. You don't have to put up any type of collateral. It's just based off your personal credit score. So Ramm Financial definitely, we fund three different ways. It's going to be either your personal credit, your business revenue, or collateral for real estate. And then other videos will go ahead and explain some of our real estate investment loan products that you can use to be able to do fix and flips, buy and holds, and then overall grow your real estate investment portfolio. But yeah, here you're seeing limits of $75,000 per card. This is a JP Morgan Chase account. Here's another 75K card. This one's 40K. So we're getting higher limits, 25K card from multiple different banks to equivalent to about $250,000 to be able to use at 0% interest for 12 months within your real estate portfolio to be able to grow it. Okay, so business credit card hard pulls. Of course, we just talked about how each bank pulls from multiple different sources. Not only that you need to know this, but we're not sending you over to a Chase or Bank of America to a teller and then telling you to talk to the teller and then say, hey, go ahead and let's apply for these cards. Because if you do that, you could definitely do it if you have good credit and get upwards of $15,000, $20,000, but you wouldn't get the limits that we just saw on the last page of 75K. The way that we're able to do it is we have multiple different relationship managers at each separate bank per region that we've built a relationship with, and we're able to get our clients these types of limits. So yeah, Experian, that's where Navy Fed goes to be able to pull their credit report. American Express, PNC, Chase, from TransUnion, Bank of America is going to be pulling from there. U.S. Bank, BMO Harris, Fifth Third Bank, and for Equifax, Marks by GC, Citi, Truist, KeyBank. So this is not really a comprehensive list. We work with multiple different, anywhere from 9 to 15 banks per state to be able to get you these higher limits. But yeah, so if you're pulling, say for example, from a Chase, we would stagger it. Just for an example, Chase first, because Chase is going to be an inquiry sensitive bank where they'll start denying you, even for the lower limits of $20,000 that you would get if you were to walk into a Chase account, if you have too many inquiries within the past 2 or 3 years. So working with Ramm Financial, we optimize your credit profile first before you're going to go and do the funding cycles and apply for multiple different lines of credit through all these different banks. So a cool note is that we would pull from Chase first before we do Amex, because Amex is not going to be looking too much of your inquiries that you've had in the past couple of years or weeks. So is credit stacking worth it? For real estate investors, short answer is yes. If you're in a different type of business model and you're I don't know, like a restaurant or e-commerce, I think it may work. Usually, it's basically you want to look at it this way: if you're going to put in $10,000 and get $60,000 out within a shorter period of time, then this is going to be one of the best forms of capital for you, because it's going to be cheap, 0% interest, low barrier to entry. You don't have to go and raise capital from other people, then split that equity 50-50 with anybody else but yourself. So, if you're doing any type of value add properties where you're going to do fix and flip and then sell the property or do a cash out refi, as long as the numbers work and you could pay back that line of credit within that 6 to 18 month time frame, usually it's going to be on average about 12 months that's going to be at 0% interest, then you can use these cards to be able to bridge loans, do these fix and flips, and then grow your real estate portfolio by just leveraging your personal credit by itself. And the beauty of these things are it doesn't report to your personal credit report. I have multiple different clients that came to us with low credit scores because they were using their personal credit cards to do these fix and flips instead of coming to us at first, letting us optimize their profile, and then applying and then connecting them with our relationship managers to get these higher limits. Because normally if you go to the bank, you wouldn't get these higher limits that you're seeing here at Ramm Financial. So credit report requirements. Usually, yes, we do like to see that you have above a 680, but the credit score is not the only thing that we'll be looking at, because it's going to be a holistic view of your credit profile. So first, 5% or less of credit utilization is ideal. 10% is fine. 10% is good, I'll say that. And then I'll say 30% is fine. We've been able to even help people with upwards of 40% utilization. But of course, they had a way thicker credit profile. So 100% on time payment histories, no derogatory marks on their current credit profile, 0 collections, no late payments. So that's why the optimization stage is going to be very, very important to be able to optimize your credit profile before we do lines of do the funding process, and then 3 to 4 years of more of credit history. So basically a fairly thick profile, but then 10 positive accounts. These aren't static numbers, basically, where it's a make or break. And when you're talking about revolving installment loans, we're talking about car loans, mortgages, things of that nature. It doesn't really have to be at 10 positive accounts, but idealistically, this is the picture perfect profile where we could get you upwards of $300,000 at 0% interest for 12 to 18 months to be able to use in your real estate business. So, quick summary: a new business can acquire upwards of $150,000 at 0% interest for 12 to 18 months using credit stacking strategy, and this is per LLC that you own. So, if you own 3 different LLCs over a period of time, you could definitely get upwards of $450,000 to be able to use for your real estate investments. Now, the beauty of these things are, yes, after the 12 to 18 month period, the interest rate does go up, but you still have these lines of credit available to you, and you can use it as emergency funds. But we always you could always go ahead and reapply through Ramm Financial to be able to get these higher limits and then get these 0% interest time frames expanded. So like say for example you're about to expire for 2 or 3 your lines of credit. You wouldn't extend that. You could, as long as your credit profiles, as we talked about and discussed before, you get multiple lines of these products. So our strategy is to input a funding strategy into your business, so that you don't really ever have to worry about where's your next down payment is going to be, or do I have to save some more money to be able to invest into my next deal, or to have to sell a property to be able to invest into my next deal. All right, so this is basically it. It's going to be very straightforward. We can help you out to get these higher limits by cutting the red tape. These are going to be not based off your business revenue. It's based off stated income, and we have the connections that you need to be able to get upwards of $250,000 to be able to invest into the real estate deals that you desire.